Hey, check this out, Wiregrass. This is Tim Watson, the Mortgage Man with Stockton Mortgage here at Mortgage Madness. And we're here with Kyle Pierce as our co-host, so you'll be listening to us every now and then when we get these podcasts done. So excited about starting this podcast to try to keep the community updated on what's going on. I think we want to probably touch on what's the biggest thing right now in the news media is don't refinance. Don't buy right now because rates are too high. So that's a lot of myth going on right now and coming from people that don't have anything to do with the mortgage business.
Yeah, I've had a bunch of clients here lately that have been able to refinance and pay off autos and everything else, especially with the growth they've seen in their equity over the last few years. You know, I've had clients save $1,500, $2,000 a month. Even though rates are higher than what they were locked in at, they're still saving thousands of dollars monthly by refinancing it, and they only have that one payment to worry about.
Yeah, what the media is not telling people, Kyle, and it infuriates me is, don't do it right now because mortgage rates are so bad. But what they didn't tell you is if you will check, not just mortgage rates went up. I went to buy a Jeep. I got a bad Jeep problem. I buy them and sell them, fix them up, and love them, and never going to sell them and then sell them. And buy a truck because I need a truck. I miss my Jeep. So, I've got great credit. Johnny and I have built our credit to where we don't miss payments. I went to look at doing trading in my truck and buying a Jeep, and the lowest rate I could get was like 6% because rates not just on homes but on your credit cards. When you get a credit card, I got a credit card at 8%. Really? Have you checked your statement lately? Well, no. Yeah, because when you look at your statement, credit card companies don't have to leave you. They've got in their disclosures if you're 1 day late, they have the right to increase your interest rate. So they do it. If you're looking to pay off debt that you have at 20 and 25%, why in the heck would you not refinance and pay off all that stuff at 20 and 25% when you can get a mortgage in the mid sixes?
Because the news said you shouldn't.
Yeah, it's crazy. I don't watch the news, man. Anyway, but yeah, you've got to quit listening to what the media is telling you because they don't know what they're talking about. All they're reading is off a script. Who's writing that script?
Now, a lot of people are looking at the housing market as unattainable right now as well. And if you look at who's been still buying during this period, we've had home buyers, of course, but you've got a lot of large corporations that's coming in and buying a lot of our rental property or a lot of our properties up as rentals. Of course, they want to keep the normal home buyer from coming in. If they can make, 20, 25% more than what the payment is on rent, why wouldn't they?
Yeah. I mean, it makes absolute sense for them to come in to our market, and we've talked to several of our preferred realtors. I mean, your family's in the real estate business, so you hear it all the time. The buyers in the Wiregrass right now are not buying because they're being told not to from people that don't know anything about real estate. It makes me sick to my stomach.
Well, do you know the number one asset most families, what their net worth is?
What's that?
It's their house.
Yeah.
Most of Americans' net worth are tied up in their properties. The reason it's always been the American dream is the little house with a white picket fence is because it was a staple. I mean, you were financially secure. You had made it.
Well, I talked to one of Johnny's, I talked to her sister that lives in Birmingham, and she told me, Tim, we're going to be paying our house off next month. And I'm like, you really don't want to do that. What? And I said, well, you really don't want to do that because of your tax credits.
Well, not just that. Think about the position they're in and how free they can be. I mean, if you're at that point to where you've paid off your asset, you can always equity mine out of it and use that to buy a income-producing asset that allows you more financial freedom. Sure, you have that property leveraged, but at the same time, you're creating new wealth coming in monthly just off of the equity that you had built in that property.
Yeah, it does. It makes a lot of sense. But right now, I want to cover today is the refinance opportunities. You had a refinance, and your savings on your client was how much?
I think it was around $1,485.
That's absolutely unbelievable. Can you imagine going to bed on, say, Sunday night, and your debts add up to, $10,000 a month, wake up Monday, and then everything gets done, and going after your closing, going to bed that night, knowing now, you only owe $8,600 a month. I mean, that's huge.
That's a big deal. It definitely is.
Well, people have got to understand nowadays. I'm not saying the news is bad. I'm not a anti-news. It drives me insane because you know who's pulling their strings, who's telling them this is what I want you to report on today. So they're going to report on murders, robberies, things like that. But then when you get into deeper into the news, they're going to attach themselves to things that are happening in the world. Who has the big bucks? Credit card companies, people like that who are going to control and tell you, tell the news media, this is what I want you to tell everybody right now. Tell people don't refinance, don't buy, things like that, because it benefits their business.
Well, think about it. If you have a high interest credit card, say you're paying $300 a month, I mean that's $3,600 a year. In 30 years, you've paid $108,000 in just interest on that credit card if you never pay on the principal balance.
Right.
Well, if you refinance your home, you get a better interest rate on it, and in 30 years, or 15, whichever note you go with, it's completely paid for. You don't have that high interest that you've been paying. You're not lining their pockets with your money.
Right. Exactly. One of my biggest advertising things, Kyle, we do a lot of advertising for our mortgage company. But, one of my biggest advertising taglines is I've backed myself with the best people in the business. So we got 9 loan officers, and they've all been in the business for a while, and they know about it. Anything that changes in the industry, in the mortgage business, I can tell you about. Now, that's why I tell people, call us about buying a house or refinancing. Well, my bank has this. Well, if you're wanting to buy a car, your bank knows all about your car. If you want a credit card, I'm sure your bank has a bank credit card. They don't know everything there is that you can qualify for in the mortgage business because there's so much new stuff coming out every day.
If banks knew what they were doing with mortgages, there wouldn't be any reason for us to even exist as an industry.
Yeah, I talked to one of the banks the other day, and I said, hey, what's your minimum credit score on a purchase? 640. Ours is what, 580?
I think even lower, maybe,
Yeah,
and depends on the loan type.
Yeah, so definitely if you want the best service and the best deals, you need to talk to one of our rate shakers. What's the biggest thing that you want them to understand today?
I just want y'all to understand, any of us that was around, 2008, 2009, and that are still around, we're doing that by keeping our clients' best interest at heart. So if it's something that makes sense for you, we would absolutely love to show you what options we have available for you. If it's something that doesn't make sense, we're also going to tell you it doesn't make sense for you.
Yeah. Us as loan officers, we're going to exhaust every option out there to help you get a home. The best thing that we could tell our clients, if it does not benefit you, we're not going to do it. We're not going to put you in the worst situation.
And not just that, but we're going to take the time to sit down and show you all the different reasons why it might not be in your best interest to do it. Because if we just tell you, you shouldn't do this, or, refer you somewhere else, you're just going to go find the next guy that's willing to actually write that loan. And he's looking more at his bottom line. I've learned a long time ago, and you and my dad both have taught me, if you put your customer and client first, then everything else will follow. So that's something I've taken to heart, and I've kept with me through my entire career and plan to keep with me through the entirety of my career.
Yeah. Well, that's definitely what our objective is. Right. A lot of companies that we've seen, Kyle, people go in there and, like you said, brought up a while ago, is, well, you can't buy right now. Check back with me in about 6 months. I mean, don't tell them what to do. What am I supposed to do? Just sit here and just wait, get back with you in 6 months and change nothing?
Well, not just that. I've noticed a lot of times it's all about the guidelines. One thing I'm not scared to do is talk. So I'll pick the phone up and I'll call the VA directly or whoever I have to get an answer. And a lot of times it just comes down to misinformation or misunderstanding the guidelines. These guys are all human. You could pick up the phone and just call them, and they're very helpful. I mean, they want to help our veterans and our home buyers just as much as anybody else.
Yeah, one thing I want to tag on the next one is some of our stories we've heard from our clients that have called us after they've talked to another lender, and that lender told them they couldn't buy because of this, what that is.
I had a buddy of mine going through a loan process, and I'm not going to divulge no names, but we had a lender that had told him he couldn't buy for basically a VA guideline, wouldn't be living in the home, within 6 months of purchasing the home, but his spouse was. So a quick call to VA, and I let him know, hey, just let your loan originator know to call the VA that as long as the spouse has taken possession, y'all are able to buy this as your primary residence under your VA home benefit. And they did. They were able to close it in 30 days, I think it was. And that was it wasn't necessarily that lender's fault, but I mean, I go home at night and I read guidelines and emails, and you just have to be on top of your game. It's just like any kind of sport. You've got to put in the most work if you want to be at the top of the pile.
Kyle, I want to tell you a story real quick about one of my clients. One thing that people have always said, if you want to buy a house and somebody told you no, you need to call Tim, the mortgage man. He'll figure out how to help you get a home. Well, I had this gentleman call me whose brother stole his identity, gotten loans, didn't pay the loans, things like that. His credit was a mess. And he had talked to a couple of other mortgage companies. They said, you just can't buy. You need to get your credit fixed. Well, that's like telling me if my transmission's slipping to fix my own transmission. I don't know anything about it. So we sat down and talked to him for a little while and looked at his evaluation, found out what was really his and not his. I told him what we needed to do. We have a program called a What If Simulator that once we pull your credit, the What If Simulator will tell us this is what you need to do to get your credit to this. It'll tell us exactly what they need to do, and we tell the client, this is what our simulator tells us. For you to get to this is what you need to do. I said, get all of that done, and every time you get it done, call me and let me know and send me proof you did it. I worked with this gentleman for 2 years. 2 years to get all of that stuff removed from his credit. Pretty much wipe it all out. And after 2 years in talking to this guy now, every month he would call and say, all right, Mr. Tim, I did this. And they were living in a 1970-something single wide. We worked together with him for 2 years. He didn't get discouraged. I would call and check in with him. He'd call and check in with me. And we stayed in contact. We became great friends. So after we were able to get all that done, do you know how emotional it was when I checked his credit finally and it said he was at a 670? When he started at a 490.
Man, so you worked with him for two full years.
Mm-hmm. And was able to put them in their first home.
Well, that's one good thing about working with a local lender, though. Not just are you able to help people in the community, but we live in this community.
That's right.
We want to see this community grow, and our clients aren't just random people on an online application we received. These are our friends, our neighbors, people we see at the grocery store. Our kids play Little League together. We want our communities to succeed and to grow, and the best way that we figure we can do it is by helping those in the community.
That's right.
And by doing it the best way we know how, through homeownership.
Yeah. So that's one of the stories, and we've got several. I mean, I've been doing this for over 22 years, and I've got several stories. So we're going to pass these on to you each time we do a podcast to kind of let you know that one of our stories may touch you and say, you know what, that's exactly what I'm going through, to where you understand that we can help you. All you got to do is give us a call.
And again, that number to call is 334-432-0808, or Tim, the office number is
794-2661. Thanks again for listening to Mortgage Madness. I'm Tim Watson, the Mortgage Man.
And I'm Kyle Pierce.
Thank you so much.